Hi, good afternoon, everybody. Good morning to everybody. And I want to welcome everybody to this webinar. Thank you for joining us today. I can see that we have quite a bit of people that have joined us, so we'll get right to it. My name is Pino Vallejo. For those of you that do not know me, I can't see the full list here. I'm a managing partner with Cyonic, and we're a global financial service consulting company. And we primarily focus on the financial crimes area of KYC, AML, and we have a heavy focus within the United States. With me here today is Ben Marsh. He's the CEO of IMETA, which is a KYC CLM software solution. Ben, great to see you again in this new environment virtually. That's the way to go now. How are you?
I'm good, thanks, Pino, and thanks. Happy to be here, and welcome everybody. And for those who haven't heard the term, client lifecycle management, or CLM, refers to both the kind of operations function within very often within banks, and also a technology which is really about helping regulated organizations manage customer journeys, such as onboarding, in an efficient, compliant, and auditable manner. So that's what we do.
Great. So today we are going to be focusing on that, specifically on the new FinCen rule that was published in September. So we'll be talking about that and go into a little bit of a detail. But just a little bit of housekeeping before we start. If you have any questions during this whole presentation, please type them in the question box in the control panel, and it'll pop up on our screens, and we can talk about it right away. At the same time, this session will be completely recorded. So if you miss any part of it, you can play it back at any time, and we'll figure out a way to get it out to everybody. So let's talk a little bit about what this new rule is and what does it mean to everybody. Well, the FinCen rule is a new rule that was published on September 14th. And most banks have 180 days to comply after it becomes official, after the I don't want to say harmonization, but the review period. And it's a law that specifically applies to non-federally regulated financial institutions, private banks, credit unions, trust companies, and so forth. And what does the law really say? That basically the law is saying, let's harmonize the process across all the banks in the United States. Let's not have a series of rules for federally insured, federally mandated, regulated banks, and then state charter banks. So the rule is looking to equal the playing field, and it's forcing these affected banks, these affected financial institutions, into coming up with a program, specifically ID&V. What we refer to in KYC is everything that has to do with the identification and the validation of that customer. So in the past, you can just onboard the client and have your basic process in order to identify the client, but now you have to have specific procedures in terms of how is it that you will identify the client. You have to have a process, a program of how you would verify that that client is indeed that client as he's telling you that he is. And you have to have a procedure, and it has to be part of the compliance program of the records and the maintenance of the records that you're going to keep for this client under the CIP rules, right? The customer identification program. And you also have to have procedures to ensure that you are validating that information that you're getting from the client, and that you're checking it against any known list, whether it's a domestic list that you have within your financial institution, whether it's an OFAC list, but you have to make sure that you have a way that you are checking this information, and that you are validating that the information is who he is. And at the same time, the customer has to know why is it that you're requiring this information. So he needs to know what the reasoning behind this and what it is that you want to do with this information. So, and clearly, the end goal is that you have to have written supervisory procedures, written compliance procedures within your AML program that talks about these minimum standards that you are going to establish, and that it has to be approved all the way up to the board of directors. So there has to be accountability, not just from the front office, not from the second line of defense, not from compliance, but it has to be that everybody that is benefiting, if you may, from the activity of this customer is responsible, is on the hook, and is validating that the information is correct. At the same time, If this is a non-physical client, if this is a corporate, you have to have a process, you have to have a methodology of where is it that you are checking to make sure that you are reviewing the beneficial ownership information of the client. You have to have a process, you have to be able to stipulate clearly what is that you process in order to identify and to verify the beneficial owner of all these corporations. You can either use a certification where the client is providing you, or that you have to have a list of places that you're identifying this information. So the key is to maintain a record. Maintaining a record of all the information that you receive, all the information that you have on the client, and exactly how is it that you will rely on that information. So that in essence is the rule, what is going on with the rule. And this has become cumbersome because the data is just so massive, and that you need a good form to harness information. And this is where technology is so key. Ben, did I sum this up correctly?
Yeah, I think so, Pino, thank you. So really the good news is that obviously Pino mentioned this is about leveling the playing field. And as a result of that, there are many other organizations that have been operating under this regulatory regime for some time now. And as a result, there's some fairly mature and well understood operating models and technology solutions to support them that can help you deal with it. So I'm going to get into the technology and the kind of best practice around that in a little bit. But first, Pino's maybe going to give you some kind of observations from practical experience that he'd like to share.
Sure. So we've been involved with many different banks in terms of optimizing the KYC process in order to understand not only what the limitation was of their current methodology, but how do you grow the business? How do you comply with this new ruling? And how do you continue to grow the business? And how do you make this effective and not a burdensome, just a cost measure in order to have this customer? How do you turn this around and make this more effective? Well, you have to have a good program, and that program involves not only having a good policy, but also to having the good systems, right? Because nowadays I can't imagine any bank, a large bank, being able to do this kind of activity on a manual process, because it's just prone to errors. And we have seen over the last 10, 20 years, when the first KYC rules started coming out, when the financing of terrorism became a real issue, that a lot of banks were complying because the Fed mandated them to comply, but they weren't really taking it seriously. And then I was in the banking side before I became a consultant, and we all suffered from the same thing. And then the Fed one day just decided to come in and started beating all the banks up and issuing severe monetary and punitive rules against everybody. And that forced everybody to start taking this thing very seriously. It caused everybody to do remediation. It caused everybody to start classifying their customers. It caused everybody to start looking in everybody else's drawers, because that's where the customer documentation went. It wasn't in one sole area. And this is where a lot of the innovation in the financial area, in the technical area, came about. And teams like Ben came up with a good solution with IMETA in order to harness all this information and to create a workflow that this can serve. So I think the banks over the last 10 years or so have learned exactly what the regulators wanted. They understand the importance, and I know most of the folks here have read the paper or seen it in the news. Any major global bank that when they get in trouble in the KYC AML area, it's not usually a slap in the wrist, but it's very, very painful fines in the hundreds of millions of dollars. So this is something that more and more banks are taking this serious. I don't know, in your experience, Ben, on where do you see the demand on your customers for the technology?
Yeah, thanks, Pino. So really, from our perspective, we see firms looking at technology to help them address three main concerns. So the one thing that Pino was talking about earlier was the requirement under this rule to have a very robust set of policies and processes, if you like, that get signed off all the way up to board level. And then, and one of the things that therefore you need to do is to ensure that you actually enact those policies from an operational perspective and then do so in a way that you can actually prove that to your regulator. So that is one of the first things that technology we look to be able to do, actually ensure that compliance, enforce it, and audit it. So the other key thing is, obviously now you've got a whole load of process which you didn't have to do before, potentially. So ideally, what you're trying to do, therefore, is asking the question about how am I going to manage this sustainably in day-to-day operations. So how can I leverage technology such that in meeting these obligations, I'm not actually bearing an unbearable cost burden on my business. And then finally, now that I've got to get all of this new information, how can I make my customer interactions as frictionless as possible and still deliver a great customer experience at the same time as meeting all of these obligations? So those are the kind of the three key areas that we see people looking for technology to help them address the problem areas. So really, the first area, a good system will help you deal with your regulatory obligations, because it will typically have a rules engine which will provide the kind of guardrails that you need when you're collecting data and fulfilling those operational tasks, to ensure that you collect the right data at the right time to satisfy those policies and actually audit the fact that you've done them. And many systems like our own come pre-built with a set of rules that you need to carry out an effective SIT program, risk scoring, and the logic to ensure that all your obligations under identification of UBOs and ensuring that you're screening the right parties that you need to for politically exposed and sanctioned entities. All of that kind of comes wrapped into one part of the process. The second two questions, really, in terms of sustainable operations and frictionless client experience, are really two sides of the same coin. And actually, the key to tackling these successfully is data. So the first thing is the data that you already hold on your customers. So we often see that firms have got bogged down reprocessing data on parties they already hold multiple times. So every time they're part of a customer relationship that includes them. So in particular, when you've got people like myself, for example, where I'm an officer of my business, but I'm also an individual account holder in my own right, we often find that many firms would ask me for the same information twice. So the core thing really is to get some kind of system that can help you centralize your data, have a single view of the client, and be able to reuse that client data every time that you have a relationship with them. So that will both save you time from an operational point of view on processing stuff, and it will also save you upsetting your customer for asking them for data that they already have. So that's one. And then the second area that you can really leverage data to help in this process is by leveraging the power of externally available data. So I'm sure many of you are already carrying out processes like checking for sanctioned individuals or as part of what you already do. But most of the vendors, there are a large number of vendors out there who can provide you with APIs that allow you to source data on companies, verify the identity of individuals, and also to screen them. So you've got companies out there like LexisNexis, Dun & Bradstreet, Bureau van Dijk, Experian, RDC, to name but a few, that have got great data that can be connected directly into your technology solution that will reduce the need for, rekeying, swivel chairing, and actually can help you even pre-populate the forms that you give to your customers. So not only this, but actually staying connected to those APIs will allow you to keep an up-to-date picture of your risk, rather than probably the current scenario where many people have, where the client file sits in a cabinet for 3 to 5 years before anybody has a look at it. So those are the sort of strategies that we see our customers using to automate their processes and significantly negate the kind of cost overhead that you might otherwise have, whilst at the same time enabling a great experience for their customers.
So I think it's fair to say that even though these are new regulations that affect a good size of the financial institutions in the United States, it doesn't go unheard, right? Because there's a technology solution, there's a lot of good insight of what can be done both on the data management side and on the workflow experience. So it is something that unfortunately cannot be ignored, and it has to be a program that has to be up and running in the next 6 months. When this rule takes effect. So that is something that we're sure the regulators will focus on and want to make sure that everybody's compliant. So as you were talking, Ben, I saw that there was a couple of questions coming in. There's some good questions, so we'll try to get to all of them. If we cannot get to all of them for respecting the clock here, we'll make sure that you get a direct answer on an email and on a copy of this webinar so we can answer them. So let's start with the first one. Let's go in order. What do we see as the most challenging part of this rule? If I may, I think the most challenging part of this rule would be the data management side, being able to harness the information, being able to use the information in such a way that you will comply with the rule. If you don't have a good process, if you don't have a good system, if you don't have a workflow tool, it will be a daunting process to maintain. And it will just going to double and triple your amount of work over a period of time as you start reviewing the clients going forward. So clearly, before you enter into any of this program, before you're looking into automate or put a solution in, you have to take a look at your processes, and you have to make sure that the data management is something that is a key, it's critical of how is it that you're going to adjust the program, and how do you put up a proper game in play. Here's a technical question, Ben.
Yeah, I was just going to say, I think I agree with that, Pino, and I think it gets particularly challenging for people as they move from dealing with natural persons as customers going into where they have corporate customers, and the requirement now to capture the look through into ultimate beneficial ownership, I guess, yep, in terms of that area. Sorry, and you were going to say what?
No, absolutely. And it's actually the same question. The person wrote a follow-up question. It says, from a technology point of view, what also do you see as the main challenges from a technology and data perspective?
Okay, so that really is the main thing, actually, in terms of, you know, it's building. So I think I'll answer that question in 2 ways. It's really thinking about this, or we believe it is at any rate, thinking about this more of as a data challenge rather than necessarily a process challenge. So really you're focusing very much on the data that you're capturing and the automation of that as much as possible. And then thinking about the process and manual process being something that you try and do by exception, rather than baking a kind of a multi-step manual process into this from the get-go. So I think that often for operations people, and certainly I used to be one, you know, you're used to moving from something from A to B across your desk, rather than necessarily looking at something in a completely holistic way. So I think that's another a thing, really. It's a kind of a mindset shift in a certain way about thinking about this as a holistic process, thinking about it from a data perspective, and thinking about it from an automation first perspective. And I think if you take that route, then that gets you into thinking about, you know, the best practice around things like reuse of data, the connectivity, all of those things as a way of driving that automation.
Couldn't agree more, Ben. It's a key to have those things resolved before you put any program in place. A next question here is very interesting. How will this affect my client classification and therefore my risk rating? It shouldn't. It shouldn't affect it because you should have something already. This law particularly affects what we call the IDMV, the identification and verification. So to the extent that you already have a risk rating assigned to your clients, that you have a classification to your client, it won't be affected. If anything, this IDMV process will enhance the classification and the risk rating that you have for your client to make it more robust, more defendable, right? And when it comes to the policies and the controls that you have in place. And that's the effort. That's really what this rule is looking to do, is looking to be able to put a single platform across everybody's classification and risk rating of clients. So, but that's a really good question. Next,
I might add, Pino, that again, it probably may change your client classification or your risk rating model, or need some changes to your risk rating model in that, you know, certainly again, as we talk about looking through to UBOs, we see that many people use disposition of UBOs as a factor that impacts the risk on the actual client entity. And that's something that you may not have looked at before.
Correct. And it's interesting, Ben, because the next question goes right in hand with, I guess, the readiness of your clients, right? In your experience, do you think that the regulators, well, the question comes in, might there be a grace period based on your experience with other sectors, with the regulators imposing this rule?
That's a good question. I mean, and Pino, maybe you're better to answer that with respect to the US regulator. Certainly in Europe, we see, because as I understand it, there's a very prescribed period under the way that FinCen operates between when a rule is announced, when it effectively is, and when people have to actually enact it, which is what, 180 days?
180 days, correct. Yes.
Yeah, so in Europe, we often see regulators giving people a little of a grace period, and then even often a gentle warnings when they're getting ready to actually start to give review periods. I'm not sure what FinCen and the US regulators do to that degree.
And I think it's something similar in the US. A lot of times there's a period of time where a lot of the affected banks can go ahead and comment, and that's what gives way to this 180 days. But after that 180 days, we see normally, not that they will necessarily extend the period of compliance, but what they do is that they come in gently and they take a look at your program. But after they speak to you and after it's been there in place, they do tend to come in with a heavy hand if you still haven't gotten the message, as they would normally say. But that's a good question. But it's something that we suggest that if you don't have something, you start thinking about what it is that you need to have and start getting something ready. Because the reality is that 6 months is not a lot of time. It takes that long to put a good program together.
It's pretty aggressive, actually, isn't it?
It is quite a bit.
In fact, especially if you've got to start from the ground up from a policy perspective.
That's correct.
Yeah.
And that brings it to another good point. And the next question is, are you saying then that this new rule in effect, we need to remediate our current client base? So this goes to Ben's question, right? How ready are you, and is 6 months really enough? And this goes back to the question about the classification and the risk rating. If you already have a program and you already following that program, you do not need to remediate. Clearly, this is an enhancement of your program. But if you have deficiencies in your processes, in your program, it might make sense, or even if you want to reclassify your customers for whatever reason. We see a lot of banks going now to what they call a perpetual KYC instead of doing a high, medium, and low, and just do a event-driven KYC review. So whenever you do that kind of activity, you might need to do a remediation. But I don't think necessarily that this rule is going to cause every single bank affected to go through a remediation process. I don't think that would be necessary.
So does that mean, Pino, that people effectively have until the next time that they were due to do a review on their clients? So were reviews already part of the process for this particular set of institutions?
Yeah.
Yes. Okay.
So within 6 months, you have to have a program, a procedure, a compliance program that says, this is how I ID&V the client. This is how I ID him. This is how I validate him. This is how I do the beneficial ownership. And this is how I'm following up to make sure that the client is who he is. So that, going back to your question, is that will enhance the classification and the risk rating. So it's just going to make a better program overall.
Okay.
And I think we have, let me see, we have time for one more question. I think. So would a managed shared service across the industry be a viable solution and or model?
So I think that's fair. As far as I understand it, the credit union market, you already have a fairly well-established sort of shared service organizations operating in the sense of the credit union service organizations, and therefore I think a managed service is definitely a viable option for this and other sectors of the financial industry.
I agree, Ben. I think that the banks over the last 10 to 15 years have spent so much money putting in all these programs in place and complying with the rules that in order to become efficient again and to focus on the real, on what's really important in making money on this side, they begin to look at ways that they can not so only outsource, but to centralize and look for managed services solution. Now, we all know that with any sort of outsourcing, the responsibility, the controls, and it still stays with the bank, but that doesn't mean that there is not a possibility that you can outsource a certain part of the KYC process, whether it's ID&V or the screening part or the classification, as long as the compliance is involved at the end and that the controls are there. So we do see two of the areas that we see the KYC world in this financial crime area growing is on the perpetual KYC, pulling away from the high, medium, and low risk classifications and going through an event-driven classification model, and also in the managed services. So some of the big international corporate investment banking solutions are going that way, and they're beginning to pop up. Some of them local, some of them global, but that is the new way we think that's going to grow in the future. So I think that's it, Ben. We spoke about a lot. We had some really good questions, and looking forward to be able to carry this forward with you. Is there any other words you want to say before we wrap up?
No, I'd just like to thank all of the attendees for making the time to come and listen to us. And obviously, if anybody has any questions that they'd like to raise, please feel free to contact us. And I'd just like to thank you all for attending.
Great, absolutely. And a reminder, we will be sending out the details after this event, where you're all welcome to share. At the same time, we'll also include Ben's contacts, my contacts. If you have any other questions, or if you want to review anything with us, by all means, feel free to reach out to us at any time. We'll love to hear from you. Thank you very much, folks.
Thank you all.
Bye.